everybody. Today we shall be looking at classification of accounts. But what is accounts? Account is a systematic and summarized record of transactions of similar nature pertaining to persons, properties, income and expenses. Now, how do we classify accounts? Account is classified into personal account and impersonal account. Now, personal account is the account of persons like Olu account, Segun account, that is natural persons, account of persons. While also in personal account we have artificial person like business organization, public limited liability companies, private limited liability companies, cooperative societies and non-governmental organization, non-profit making organization. Then we also have representative person in form of capital account and drawings account. In the case of impersonal account is an account that does not deal with person but is further classified into real account and nominal account. Real account is the account of tangible physical assets and intangible assets. Physical assets are motor vehicle, machinery and so on and so forth, while intangible assets are patent rights, copyright and trademark. Then nominal accounts is the account of expenses and revenue. What is a ledger? Ledger is a principal book of accounts that contains permanent records of all business transactions in a classified and summarized form. It is the main book of accounts where double entry principle is applied. Now, the types of ledgers are cash book, general ledger, sales ledger, otherwise known as debtors ledger, then purchases ledger, also known as creditors ledger. Cash book is both a subsidiary book of accounts that performs the function of a ledger because it is the first book of accounts where transactions involving cash, transaction made on cash basis are recorded, and it is equally the last book of accounts where transactions involving cash are recorded. So in the cash book, double entry principle is maintained, which makes it to perform, which means it performs the function of a ledger, because in a ledger double entry principle is applied. General ledger is a ledger that contains the account of assets, income and expenses, meaning real accounts and nominal accounts are contained in the ledger. Then sales ledger or debtors ledger is a ledger that consists of the account of debtors to the organization, that is those who the organization sold goods on credit to. On the other hand, purchases ledger or creditors ledger contains the account of creditors of the organization, that is the suppliers from whom the organization bought goods on credit basis. So thank you and have a great day.